Hello and welcome to Business 360. I'm Shireen Bhan. Here are the top stories that we are tracking for you this evening, and there's plenty of them because we are in the midst of earnings season. Let's start with the market action. Stock markets rally in the last hour of trade. The Nifty is now within touching distance of the 20,000 mark. The sensex gains nearly 500 points. Reliance spins off its financial services business. HUL Financial is valued at about $20 billion as stock exchanges hold a special one-hour session for price discovery. The market values one share of HUL Financial at nearly 262 rupees, which is much higher than analyst estimates. Infosys meets estimates in the first quarter, but hands a very sharp, unexpected cut to its full-year growth outlook from 4 to 7% earlier to just 1 to 3.5%. FMCG giant HUL marginally misses estimates in Q1. Net profit sees a growth of 8%. Underlying volume growth is at 3%. Netflix subscriptions jump 8%, revenue up 3% as password sharing takes hold. The password sharing restrictions take effect in India starting today. Meanwhile, EV giant Tesla boasts a record quarterly revenue, but operating margins drop below 10%. Market regulator SEBI is likely to issue a new consultation paper on total expense ratio for mutual funds within a week. Sources say significant changes likely. Industry had requested for the exclusion of GST and securities transaction from the expense ratio calculation. The Supreme Court takes suo motu cognizance of the video showing two women being paraded naked and being sexually assaulted in Manipur. Chief Justice Chandrachud says if the government does not act, the court will. 78 days after the incident, Manipur's chief minister says one person has been arrested. The government orders Twitter and social media platforms to remove the video. Prime Minister Modi says the Manipur incident has shamed the country and the guilty will not be spared. This is his first comment about the violence in the state, which began 2 months ago. Opposition parties demand Manipur Chief Minister's resignation. Parliament adjourned without any business on the first day of the monsoon session. Rain alert across Indian states. At least 12 killed in a landslide reported at a village in Maharashtra's Raigad district. Many more feared trapped. Rescue operations are ongoing. The government proposes that OTT players set up a committee or an additional layer that would review scripts before a show or a series is commissioned. Gives them 2 weeks to contemplate the proposal amidst the centre raising concerns that OTT content is not aligned to Indian values and culture. Well, let's start with the action from the Lal Street. Last hour rallies saw the market scaling new peaks for the second day in a row. The Sensex and the Nifty gained over 0.5% today. The Nifty is now just 20 points shy of the 20,000 mark, as you can see there on your screens. With that up move, we've actually seen a significant rally. This is the fastest ever 1,000-point gain that we've seen. Mid-caps underperformed the blue chips today, and those indices ended the day higher, except for Nifty IT. The Nifty has now gained 3,000 points since March of this year. Let's go across to Nigel now. He's standing by with the top gainers that have led to the rally that we are seeing. Nigel.
Well, the Nifty almost went to around the 20,000 odd mark, but fell a little bit short. But that doesn't take away from the fact that the last 4 months, what a rally we have seen. From peak bearishness, we have moved to peak bullishness. The Nifty up more than 3,000 points, the Nifty Bank up more than 7,000 points. And in terms of total market capitalization, we have added more than 50 lakh crore rupees. Well, on the Nifty, these 3,000 points, well, they have primarily been contributed by big boy Reliance Industries, ITC, the two big banks in there, and even Bajaj Finance. So close to around 45% of the gains are on top on the back of these stocks itself. In absolute moves, you're talking about frontline Nifty names that have given you big returns. Tata Motors, IndusInd Bank, you have HDFC Life, Bajaj Finance, as well as Mahindra & Mahindra. Well, they have gained more than 30% just in the last 4 months or so. Well, you'll say the Nifty has done quite well. 3,000 points, 17.5%. The real party has been in the mid-cap and the small-cap space. And that's the absolute index that it's moved up by around 24 to around 27%. But individual names, they have moved very, very well. Frontline names, if people who are throwing in the towel on Oro Pharma has given you more than 60% returns. Polycap, stellar numbers, that stock is up close to around 60%. And L&T Finance as well as Paytm, that's up more than 50%. But the list doesn't end there. You have a few more names that should come up for you on the screen. Patanjali Foods, PFC, IDFC First Bank, as well as Pyramid Enterprises. All these names are up by close to around 50%. It doesn't end there. If you look at the small cap names, well, they've given you even better returns. You're not satisfied with 50, 60% returns. Mazagon Dock, Suzlon, RVNL, Tanla, as well as BSC, all of them up more than 70%. And let's wind this down with a few more gainers from the small cap space that have given you big returns of more than 50%. Short point, last 4 months, what a rally we have seen. The Nifty up more than 3,000 points, market capitalization up more than 50 lakh crore rupees, telling you that the bulls, well, they have been charging ahead.
All right, Nigel, many thanks for joining us. That was the market action. But speaking of the market action, shares of Jio Financial Services, the demerged NBFC arm of Reliance Industries, has been pegged at 261 rupees a share. This is based on the difference between the Reliance Industries stock price after the special 1-hour price discovery session and yesterday's closing price. Prashant standing by now to take us through what Jio Financial Services implied market cap could be. Prashant.
Well, so the demerger has happened and Jio Financial has been spun out of Reliance as a separate entity. Let's take a quick look at a few quick numbers. Now, Jio Financial Services demerged price was for Jio Financial Services was found at 261.85, which is, as you can see, based on subtracting the RIL price discovered in the pre-open session from yesterday's closing price. Now, Jio Financial Services potential market cap, right? The implied of the potential market cap of Jio Financial works out to 1.66 lakh crores. Basically, since the merger, the demerger ratio is 1:1, you just simply take the equity capital of Jio Financial Services, RIL x the treasury stock, 635.3 crore shares, multiply that with the discovered price, and you get the implied market cap, which is 1.66 lakh crore rupees. Now, this is what the market is implying, right? But the SOTP, based on what Jio Financial Services already has, also works out to not a very different number. And you can see the breakup really coming through here. Let's actually tell you, how I've broken this up. The reported net worth of Jio Financial is 28,100 crore rupees. From this, you subtract the cost of acquisition of this 6.1% stake in RIL. Right, the value of the stake is much bigger, but the cost of acquisition for Reliance or for Jio Financial is 17,000 crores. So the core net worth is 11,100 crore rupees. You can sort of lever that, give it a multiple of 3 times, and you're basically looking at a core book of 33,300 odd crores. Now there is the 6.1% stake, which you will value at the current share price of Reliance Industries. Now, taking RIL's market cap as 18 lakh crores, the 6.1% value works out to 1.1 lakh crore rupees. You basically add the, the 1.1 lakh crores and this number, the earlier number, 43,300, and you get the total number, which is 1.43 lakh crores. So, as you can see, there is not very much by way of a difference between what the market-derived value is and what the SOTP value is. You can change these numbers around. Instead of 3 times book, you can give it a 4 times book, and the numbers will change around. But as you even right now, there is not that much of a difference in terms of both these numbers. What next? As we've been saying, Jio Financial will remain part of the Nifty and the sensex and other indices at a fixed price of 261.85 till it actually lists. So it'll be the 51st stock on the Nifty, 31st stock on the sensex. Of course, not traded. The price is fixed. And then it will be removed from all indices post-listing, subject to conditions, etc. We don't, as of now, of course, have a listing date for Jio Financial Services. Back to you.
All right, Prashanta, we will be waiting for that listing date. Many thanks for joining us. But that's the HUL management talking to us about the results, as well as giving us commentary on what the road ahead looks like. Let's listen in.
10% on a very strong base. Balance between volume and value. Beauty and personal care delivered a volume-led growth of 4%. Foods and refreshment grew 5% with near flat underlying volume growth. Margins in all 3 segments remained healthy, with home care at 18%, beauty and personal care at 26%, and foods and refreshment at 18%. Talking about some of our innovations, Dove Men Plus Care range, Indulekha soap, Nor Chinese sauces, Brew cold coffee, and a new range of water purifier by Pureit were launched in this quarter. Surf Excel Matic Liquid was relaunched with a superior formulation. Moving on to our margins, as we had indicated, we remained focused on building back our gross margin and stepping up A&P investments behind our brands. In this quarter, our gross margin improved sequentially by 140 BPS, and we stepped up A&P investments by 110 BPS versus March quarter 23. Speaking about the progress made on some of our key sustainability initiatives, during the quarter, we signed a strategic partnership with JSW Foundation to establish 10 new Suvidha centers in Mumbai. These new centers will benefit 2 lakh people annually, saving 300 million litres of water over a decade, and will run on solar energy. In association with Genpact, we launched Be Seen, an accelerator program to help scale businesses owned by minority and underrepresented groups in India. This program aligns with our ESG goal of increasing procurement from diverse businesses. FICCI has set up a center for sustainability and with leadership and partnership with HUL as a founding member. The center aims to accelerate India Inc.'s climate action in line with government's net zero commitments embodied in the Panchamrit framework. Now moving on to outlook. Near-term operating environment continues to be volatile with weather-related risk. We need to be watchful of the progress of monsoon and any impact of El Nino on cropping and rural demand. We expect market volumes to recover gradually due to high levels of cumulative inflation and the fact that consumption habits typically recover with a lag. In this context, we continue to manage our business with agility and take actions to ensure long-term 4G growth that is consistent, competitive, profitable, and responsible. Speaking specifically about outlook for next couple of quarters, price growth will further tail off with lapping of high prices in the base and sequential pricing reduction. If commodities remain where they are, we expect our price growth to be near flat or marginally negative in next couple of quarters. With inflation moderating, the competitive intensity is likely to go up further. We remain focused on providing superior value to our consumers, building back our gross margins, and investing competitively behind our brands. We expect to sustain our volume growth momentum. With this, I complete my prepared remarks, and now we can take some questions.
Right. Thank you, Nirvan, for giving us a detailed brief into what you see going forward. But a two-part question. The first one is for Ritesh. Ritesh, you said that competitive intensity has increased even as the consumer environment is gradually recovering. So what proportion of your gross margin savings would you have to reinvest in ad spends? And to that extent, what is it that you can guide for in terms of margins going forward? Because volume, if it sustains with flat price growth, you know what the top line trajectory would be. And the second one, I would like Mr. Java to answer. And because it's the first time, you are speaking to all of us here, in a process-oriented organization like Hindustan Unilever, what kind of personal aspiration do you have in your era? And linked to that, what are your near, medium, and long-term goals?
So let me pick up gross margin then, I'll hand over to you. So gross margin, as you know, the peak of inflation in September quarter 22, we had lost almost 600 BPS margin. This was because we saw very high amount of commodity prices and we never priced our products to the peak of inflation. From the 600 BPS of margin dilution with gross margin, in last 3 quarters, we built back 400 BPS, including 140 BPS in this quarter. A large portion of that, 300 BPS has got invested back in A&P. Our A&P, which was more like 7% 3 quarters ago, and this quarter, as we reported results, is roughly 10%. So hence a large portion has gone back into investing. Overall intensity of competition and also media intensity in the market has gone up. Media investments, if I look at both GRP, also the new age media put together, we're almost back to 2019 levels now. And hence, if I look forward, it's a very similar, in our view, the focus will be to keep driving gross margin improvement and investing behind A&P as you see further amount of dial-up on competition intensity.
So what happens to the EBITDA margin?
Yeah. So this is a time where the line of the margin which is most important is gross margin. Because we have to generate fuel to ensure that there's enough amount of investment for driving innovation, for driving overall market development. And hence we are at this point in time squarely focused on driving gross margin. And you've seen the amount of substantial margin that we have increased in the last 3 quarters. More work to be done in that space. And as that happens, idea is to ensure that we're able to further dial up A&P investment. Where we are with the margins today, at this quarter you've seen we declared 23.6% margin. It's a pretty healthy margin where we are. Hence focus will be to drive competitive volume growth, sustainable volume growth momentum, and keep investing behind A&P fueled by gross margin. That will be the focus for us from a P&L management perspective.
Just a follow-up on that. So the margin margins that we have currently gotten, would that be something that you would look in that range? EBITDA margin is what I'm talking at, or maybe we could expect a bit lower?
Yeah. So our margin, as I mentioned, is squarely focused on the line of gross margin at this point in time. We want that to go up. And of course, what comes in EBITDA ultimately get driven by amount of money that we need to spend in A&P. So that will be more of an outcome this point in time. Right?
Yeah, thanks a lot. It's a really good question to start with. First of all, I'm very happy to be here and to speak to you, and hope to have more and more of these conversations. And as my time develops and we have more things to discuss. But let me first start by responding to your question on how I feel about the whole. So first of all, I'm very excited to be back home, and it's been a long time since I worked in the company and in the country, but this is indeed the company and the country of my birth. So I feel very proud and privileged and honored to have this responsibility. So I'm very excited, and I'm very hopeful, very optimistic about the future. There are many reasons why. To start with, I think India is at a really, really important moment in its history. The opportunity, we all know about that, is immense. And the next decade, we've heard that from many people, is going to be India's decade. So to be here at this point of time, being in charge of the biggest and the most aspirational consumer goods company in India is really a matter of great privilege and honor. So I feel very, very honored about that. I think as far as the company is concerned, I've been now meeting consumers, customers. I've been around the category teams. I've spoken to functions. I've been to one factory or two. So I have a pretty good sense of the business. And I must say, having come back, I feel very, very proud of what's happened. And the business is in a great shape. It's a great business. Very, very strong positions when it comes to market leadership positions of our brands. I see very strong, to your point of process, very, very rigorous processes. Our talent, depth, and quality is absolutely first class. We have also done amazing amount of work on community. So I think we're living our vision and purpose of what's good for India is good for Hindustan Unilever. So I feel the impact. I see the programs, and many of them, they are flagship programs. They're making a big difference to the communities. And above all, I think our focus on our strategy is also, I feel, very, very consistent, very disciplined. So if you look at the 2 or 3 fundamentals of driving our portfolio through market development, premiumizing it, driving our brands through purpose and innovation, winning in channels of the future like e-commerce and eB2B, and essentially building distinctive capabilities like winning in many Indias, our Symphony cost program, and our talent. I think I'm very excited with all of that which I inherit. And my intention now going forward is to take this to the next level. And the market in India, as I mentioned, is changing constantly. So our strategy will evolve, building from our strengths that I've just mentioned. And we will, of course, account for the changes. So whether it's deepening our premiumization effort, or getting further in our Reimagine HUL digitization program, or in fact bringing sustainability even further into the heart of the business while maintaining our core brands, our reach, our distribution strength, those moats. That's really how I see the business going forward. And I think we'll have more opportunities, and as I have more time, we will speak more about this, and there'll be a capital markets day towards the end of the year as well. So, yeah, watch the space. There's a lot going on here, and lots more exciting things to come ahead.
Is there anything personal which is, of specific interest to you? Any category, any area, any form, function in Hindustan Unilever or from your experience at Unilever that you would like to bring to Hindustan Unilever?
So I was here 15 years, and my first day in Unilever was in the market, selling. So that's always been close to my heart. And when it comes to the last 2 decades, and of which last decade is spent in countries like China and Philippines that have been through their own evolutions, and particularly China that's seen this massive growth in digitization and premiumization. And in a sense, that is a sort of forebearer of the future. It's not going to be exactly the same pattern and trends, but I see India would follow a similar trajectory, in fact, maybe even faster, given the India tech stack and the hardware and software infrastructure that's being built. So I would see bringing the kind of future that I've already seen in other parts of the world to India would be something very personal, because you don't need to learn the same lesson twice. And I think with the India centricity to it would be something that would be how I'll bring more and more of that color into the business in our discussions.
All right, that's Rohit Java, the new CEO and MD of Hindustan Unilever. But we are in the midst of earnings season. Infosys delivers numbers that are in line, but the shocker really is the guidance, which has seen a sharp downward revision. Let's listen into what Salil Parekh has to say and how he explains that downward revision.
We are delighted that Topaz, a generative AI platform, is resonating well with our clients. We are working on 80 generative AI projects for our clients at this time. The work we are doing covers large language models for software development, for text, document, voice, and video. Internally, we've developed generative AI tools based on open source model of generative AI platforms that are focused on software development. We've trained 40,000 employees in this area, and we see generative AI and Topaz being transformational for all of our clients. In the short term, we see some clients stopping or slowing down transformation programs and discretionary work. This is especially so in financial services, in mortgages, asset management, investment banking, and payments. And in telecom, we also see some impact in high-tech industry and in parts of retail. Even as we won 2 mega deals recently, we have a strong pipeline of large and mega deals. We see revenue from some of these and other large deals towards the later part of our financial year. Keeping that in mind, we are changing our revenue growth guidance for this financial year to growth of between 1% to 3.5% in constant currency. We have launched a broad, comprehensive margin expansion program. The program will work across 5 areas: pyramid efficiency, automation, improvements in critical portfolios, reducing indirect costs, and communicating and deriving value across our portfolio. We have an ambition to improve our operating margins in the future periods. Our operating margin guidance for this financial year remains unchanged at between 20% and 22%. With that, let's open it up for questions. Rishi.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. With that, we have the first question from Ritu Singh from CNBC-TV18.
Hi, here. The first question, of course, is on your guidance cut. It was a steady quarter for Infosys, whether it's the constant currency growth, the mega deals that you've announced, a couple in the quarter and after the quarter close, and your TCV is also higher than the previous quarter. What has so drastically changed in the last 3 months for you to cut your guidance from 4 to 7 to 1 to 3.5? And given that top line you're expecting lower now for the year, how are you confident of maintaining margins at 20 to 22% for the year? That is the first question. And also, your commentary from clients in terms of when you see revival in your discretionary spends from whether it is BFSI, retail, high tech, all these areas of concern that you've outlined, and your net employee reductions for the last couple of quarters, that's also been coming down. So we wanted to understand what your hiring plans are. We understand you've already deferred pay hikes for some of the employees. If you could give us a sense on that. Thank you.
So on the first point, on the revenue growth guidance, we have, as you rightly pointed out, had a good Q1. We've had good large and mega deals. We've also seen some of these deals, the signings and the start dates being delayed. With that, we see a lot of that revenue from that sort of large and mega deals towards the later part of the financial year. And through the quarter, we've seen volumes in some of our clients in the industries that I shared were impacted, where they were reducing transformational projects or slowing down decision making. So when we combined those two and we looked out for the full year, we saw that sort of a range in terms of the growth guidance and decided that we should change our growth guidance.
Thank you. We'll try to come back to you.
On the margin. On the margin, we have an extremely strong discipline for our operating margin. We've put in place this expanded margin program that I was referring to. There are 5 elements of that program, each of them being driven to make sure we have efficiency. You've also seen utilization in Q1 go up, and we will continue to see that with all the focus we're putting into productivity. We're also looking at reducing within those 5 elements indirect spends and cuts of that nature. So we feel comfortable with our operating margin guidance, and our operating margin for Q1 at 20.8 was more towards the middle part of that range. So we still have a target for recruiting for the year, but we will see how that plays out with respect to what are the changes in terms of the demand environment and what we do in terms of the attrition numbers that we're seeing. The attrition that we saw in the quarter was stable versus last quarter. Our trailing last 12-month attrition is down to around 17%. So we see that driving some of the decisions on the recruitment.
What did you say your target for hiring for the year was?
We've not given that target. We said we will look at that based on what that demand environment looks like and how we see the rest of the year playing out.
Thanks, Ritu. The next question is from Haripriya Sureban from the Hindu Business Line.
Is it just for the transformational deals that you're seeing, or has it translated to the cost takeout kind of regular kind of deals as well? And given that AI you're mentioning, you have many active projects, do you think that will sort of help you with margins as well, given that it is coming at a higher price point?
So on the first, the decision making we see has slowed down across large programs. The way a lot of the transformation programs that are running today, they are funded from cost efficiency that comes through that program itself. So overall, the decision making sometimes is slowing down, and we are seeing the start dates in terms of where some of these programs are likely to start more towards the back end of the year, and that's the reason we're seeing the revenue impact through the year. On generative AI, we are excited to be doing 80 projects. AI programs generally have good margin. They have a lot of work which is focused on enhancing productivity, driving new areas of growth. But at this stage, it's a start. So we'll see when that scales up what the impact on margin is.
Thank you. The next question is from Shilpa Phadnis from the Times of India.
Hello, sir. If you just look at your
Shilpa, just hold the mic a little closer,
1%,
please.
on an annualized basis, you could have grown at 4%, and your guidance is subpar. So I just wanted to understand from you, are there deep client concerns that's made Infosys scale down the guidance significantly?
So the discussion on the guidance sort of similar. We have seen many of these large and mega deal wins really give us much more confidence in the way clients are working with us, especially on cost efficiency, even with financial services when we announce on transformation, and also consolidation. However, there have been delays in the start of some of these programs and the decision making in those. Coupled with that, we've also seen some of the volume during the quarter coming down because of clients in the industries that I mentioned, so financial services, asset management, payments, mortgages, telco, etc. In those specific industries, reducing their volume of work. And those two things have combined for reducing the guidance.
I had one more question on your deal win. You spoke about the $2 billion deal win. Would that qualify as Infosys' biggest win that could potentially surpass Daimler?
So first, we are now sharing the deal value, making sure that that's aligned to the regulations that are there. For the past, we've actually never shared the deal value, so it'll be difficult to compare that.
And one last thing on the headcount, sir. The sector itself is going through a lot of people challenges, deferments of hikes and increments. So if you can please clarify what is the kind of hikes that you plan to roll out this year? Is it going to be deferred at all levels? we're getting to hear that senior level hikes are getting deferred. Can you please throw some light on that?
Yeah, so actually on the compensations, we are actively under consideration as we speak. So I'm sure you will hear of it even before we finalize that, but it's under active consideration.
Thank you. The next question is from Chandra Ranganathan and Haripriya Suresh from moneycontrol.com.
Hi. Salil, on the guidance again, I wanted to understand what has changed in one quarter, 4 to 7%, to 1 to 3.5. Any specific ramp downs that you're seeing exactly is happening? And when we spoke to other managements, they say that, even though transformative programs, discretionary, has slowed down, clients are still going in for short-term ROI projects. So, is that something that you're looking at in the pipeline? Secondly, Nilanjan, on the hikes, you said it's under consideration. By when do you expect to announce? Hari.
Hi. Also, I wanted to get some perspective on you've seen some top-level exits recently as well. Is that a matter of concern, and what are you doing to sort of stem top-level attrition? Just want to understand that.
So the first question on the guidance, I think the way we've seen it is what we saw at the start of the quarter. We had a certain view of where our large and mega deals were in terms of when they would close and when some of that work would start, plus what was the volume on the other programs, on the transformation programs, on our overall volume of work across the portfolio. What we saw is some of the start dates for the large deals, the mega deals, were more later in the year, and the decision making, even as we've announced 2 of them, we still have some in our pipeline, and we will see those over the course of the year as the pipeline evolves. And the volume which we saw the changes in for many discretionary projects or some of the transformation work. Combining all of that is where we decided that this was the guidance in terms of the growth that we could see today in terms of the outlook. What we do see is, as we look towards the back end of the year, much more growth orientation, because some of these deals will at that stage start to deliver their revenue as well. Yeah, so we are definitely seeing consolidation, cost efficiency, automation, but we are not seeing short term, meaning short projects like that. But those are the types of deals we're seeing, which is more focused on the efficiency as opposed to transformation. On the compensation, Nilanjan will come. I'll just go with the third one first. We have seen, we've announced and rolled out a new leadership structure within the company. We have the great fortune of having incredible leadership talent within the company. And each of them, several of them are stepping up into new roles, driving the growth of this business. As you can see from these 2 mega deals and other large deals, overall strength of the business, those people have stepped in, and my sense is Infosys will continue to produce those sort of leaders.
Yeah, so I think, like I said, this is under consideration, so we will come back on the timing, etc. But as of now, we are looking at it. We are looking at it as we speak, as I said.
Thank you. The next question is from Sai Ishwar from the Economic Times.
Hello, gentlemen. Salil, you were talking about the fall in volumes across the portfolio, right? So what exactly is the reason for this fall in volume? Are clients fearing of, the recession fears and tightening their spends? And also, I just wanted to ask about the, $100 million plus clients. It's fallen by 2 sequentially. So is that because of the ramp down, or is it because of projects getting completed? Thank you.
On the first one, the volumes there, mainly it's clients in the industries that I was referencing, trying to maintain their cost discipline to reduce what they consider discretionary in the short term. So we see many of these sorts of actions, for example, in mortgages in financial services, or we see that in telecom, or we see that in investment banking, or we see that in high tech. those are the sorts of projects that typically get less attention, have got less attention in Q1. On the
have you priced in, you said a lot of these start dates are baked in the second half of the year, right? So the guidance now has baked in all that, expected revenues, or will we see any, improvement in the guidance?
What we have announced as our wins on large deals and mega deals, that is already in the guidance we've given. As we go through the year, as there are more events in terms of wins, we will see what impact that has. There could be impacts which are positive. There could be impacts depending on some of things gets delayed or not. But as of what we see today is what we've put into the guidance.
On those two, I mean, I can't specifically comment on those specific two clients, but generally, as Salil said, the overall impact has been on discretionary spend cut rather than any, projects fundamentally getting over. That's the general theme.
So they've shifted to one bucket lower?
Yeah, they've shifted. So if you see above 50, that's not changed.
Thank you, Sai. The next question is from Ayushman Barua from the Business Standard.
Yeah, hi. A lot has been spoken about AI. So keen to know what percentage of deals are AI-led? Do you see a component of AI in majority of the deals? Is AI integrated in most of the deal conversations that you have? That's first. And secondly, on the pricing, are you seeing any pricing pressure as such? Thank you.
On pricing, Nilanjan will come back on that. On AI, first, we don't disclose the percentage of AI within our portfolio. However, AI or generative AI is really transformative, and it's something that's changing everything that's going on. For example, we are doing work which is related to software development, which is related to new code enhancements, migration, maintenance. That covers the spectrum of the work that we do. And it is also related to other areas, for example, voice, video, text. These are areas where we do work which is expanding the type of work we're doing. So my sense is generative AI is really going to transform everything that's happening within our portfolio. And Topaz that we've launched, being the leading platform or set of capabilities for generative AI, I think will make a huge impact. Having 80 active projects is a massive step, and it's moving with rapid speed.
The pricing environment, I think, remains quite stable. We have seen in some places we are able to get some increases from COLA, etc. Some cases isolated, again, you get some discounts. But by and large, it's a very stable environment.
Thank you. The next question is from Uma Kannan from the New Indian Express.
Good evening, gentlemen. You said there are some softness in verticals like BFSI, high tech. So will this continue, or will it be better going forward in H2? And I also want to know, where are the headwinds coming from? And is it really paradoxical times for the IT industry as such?
So there, on the first part, what we look at is, what we see within our portfolio on a daily, weekly, monthly basis. It's, from our perspective, not something we look at as to when something will stop or not stop. We have within our portfolio work that we can do on digital transformation, cloud, generative AI, which are really growth drivers in the market. When clients or industries are looking at that, we are ready with that, and we have that as one of our growth engines. On the other hand, when clients are looking at cost, efficiency, consolidation, we also have deep capability in that, and that's some of these wins that you've seen that we've announced are reflective of that. So that's what will kick in the other side. But we don't have a specific view on when something will change in that.
Thank you. The next question is from Samir Bakshi from the Financial Express.
Hello, sir. So in these times, do you see challenges in winning smaller deals when there's a cut in discretionary spend? And the second one is, when your peers are focusing on Europe, why are you not able to consolidate?